If you're a senior or retiree living in the United States, whether you're a U.S. citizen, a green card holder, or someone who recently retired and is handling U.S. taxes for the first time, there's an important IRS update you need to understand right now. The IRS has updated and tightened how certain taxpayers must report retirement-related income and foreign financial accounts, your assets. And while this might sound like just tax stuff, it can become an immigration issue too, especially if you're a lawful permanent resident, adjusting status, or planning to apply for U.S. citizenship. Because tax filing history and consistency can come up in immigration processes. In this video, I'm going to walk you through what's changed, who this affects, what to check immediately, and the safest next steps so you can stay compliant and avoid unnecessary stress. My name is James. I've been working in the U.S. immigration space for the past 6 years, helping thousands of individuals and families understand the systems that impact their lives. And today, I want to help you understand how this IRS filing update can impact you. This is U.S. Updates Hub, and I'm glad you're here. Let's start with the big picture. The IRS is the federal agency that enforces U.S. tax law. Each year, most people file an income tax return to report earnings, deductions, and credits. But what many retirees don't realize, especially those with international ties, is that how you file matters. Filing status: single, married filing jointly, married filing separately, head of household, affects taxes owed or refunded, and it can also affect eligibility for certain credits and benefits. For seniors and retirees, your income can look very different than it did during your working years. You might be receiving Social Security, a pension, IRA, 401k distributions, annuities, or investment income. And if you have income from overseas, like a foreign pension, or you still maintain foreign bank or investment accounts, the reporting rules can get complicated fast. So, what is the update you need to pay attention to? The simplest way to understand it is this. The IRS is placing stronger emphasis on complete reporting of foreign-held accounts, assets, and certain retirement income streams. And many people who never had to file extra forms before may now discover they actually do, or that the definitions used to decide whether you must file have expanded or are being enforced more strictly. This is not a new tax. It's not the IRS randomly inventing a brand new penalty. It's more like a tighter compliance push combined with updated guidance and reporting expectations that can catch seniors off guard, especially if they have foreign pensions, overseas retirement plans, or accounts outside the U.S. Here's the key takeaway. If you meet certain reporting requirements and you don't file the correct forms, even by accident, you can face penalties, interest, and long-term complications that are much harder to fix later than they are to prevent now. Now, let's talk about who is most likely to be affected. If you're a U.S. citizen or a lawful permanent resident, green card holder, and you have any of the following, you should pay close attention. You receive a pension from your home country or a foreign employer. You have a bank account outside the U.S., even if it's just sitting there. You have investment accounts overseas. You kept savings abroad for family reasons. You have a joint account overseas with a spouse, parent, or child. You're listed on an account for convenience, but your name is still on it. Two major reporting areas come up again and again. First, the FBR. This is the Foreign Bank Account Report filed as FinCEN Form 114. Many people misunderstand the threshold. The most common rule is if the total value of all your foreign financial accounts combined exceeds $10,000 at any time during the year, you may be required to file an FBER. That's not $10,000 per account. It's the combined total, and it's based on the highest value during the year. Second, Form 8938, Statement of Specified Foreign Financial Assets, which is filed with your tax return. The thresholds vary depending on whether you live in the U.S. or abroad, and whether you file single or jointly. For many people living in the U.S., the thresholds can start around $50,000 end of year, or $75,000 anytime during the year, for single filers and higher for married filing jointly. The numbers can be different for people who qualify as living abroad for tax purposes. The point is, it's very easy to fall into a filing requirement without realizing it, especially if you have multiple accounts or investment holdings overseas. And on top of accounts, foreign pensions and non-U.S. retirement plans can raise reporting questions too. Some foreign retirement arrangements don't fit neatly into the U.S. retirement categories, and the correct treatment may depend on tax treaties and the type of plan. That's why guessing is risky here. Now, the big question many of you are asking is, can this affect immigration? Directly, the IRS doesn't approve or deny immigration cases. USCIS and the IRS are separate agencies, but indirectly, yes, tax compliance can matter in immigration situations. Here's how it can show up. If you apply for naturalization, USCIS may consider whether you filed required tax returns as part of the overall good moral character picture. If you're petitioning for a family member or being sponsored, tax documents often matter because sponsors commonly submit tax transcripts and income evidence. And if there are inconsistencies like income that doesn't match what was claimed elsewhere, those inconsistencies can create delays, requests for evidence, or credibility issues. This does not mean one mistake automatically destroys an immigration case, but it does mean it's smarter to fix tax issues proactively than to wait until an immigration officer or a benefits process forces the issue. So what should you do right now? First, gather your information. That means bank statements, retirement and pension statements, investment account summaries, and anything related to foreign accounts or foreign income. Don't rely on memory. Look at the numbers. Second, identify whether you might have foreign reporting obligations. If you have any foreign accounts at all, it's worth checking whether the FBR rule applies. If you have larger holdings, it's worth checking whether Form 8938 applies. And if you have foreign pensions or non-US retirement plans, you should assume there may be special reporting rules until a qualified professional confirms otherwise. Third, get help if you're unsure. This is one of those areas where a qualified tax professional, especially someone experienced with international reporting, can save you from expensive mistakes. A CPA enrolled agent or tax attorney who regularly handles FBR and Form 8938 issues can help you determine what applies to you and how to file correctly. Fourth, understand the forms at a basic level so you don't get intimidated by the names. The FBR FinCEN Form 114 is filed electronically through the FinCEN system, not with your normal tax return. Form 8938 is filed with your tax return and asks for details about foreign assets. There are different forms with different thresholds, and sometimes people must file both. Fifth, keep records. Save copies of your filed tax returns, confirmations for FBR filings, Form 8938 submissions, and any correspondence with the IRS. If you're a green card holder or you're planning to apply for citizenship later, keeping your tax compliance records organized can be extremely helpful. Let me give you a simple real-life example of how this can matter. Imagine a 70-year-old retiree named Robert. He became a lawful permanent resident 10 years ago. He receives a pension from his home country, and he has an old investment account overseas that he never closed. He has always filed U.S. tax returns, but he assumed the foreign pension and overseas account didn't count, or he didn't realize additional reporting was required. If Robert is required to file FBAR or Form 8938 and doesn't, that can lead to penalties and complications. And if Robert later applies for citizenship, he could end up having to explain and fix years of issues at the worst possible time. But if he gathers his records now, gets proper advice, and files correctly, sometimes including corrected filings if needed, he can protect himself and move forward with peace of mind. Now, if you're feeling worried because you're thinking, what if I already missed something? Take a breath. Many people don't learn these rules until later, especially immigrants and retirees. The important thing is not to ignore it. In many cases, people can correct mistakes, file late forms, and potentially request penalty relief depending on the situation and whether the mistake was non-willful. The worst move is doing nothing and hoping it disappears. As we wrap up, I want to remind you why US Updates Hub exists. This channel is here to give you clear, practical updates, especially where taxes, immigration, and real-life consequences overlap, so you can protect your future without panic. If you found this helpful, like the video, share it with someone who may need it, and subscribe to US Updates Hub so you don't miss important updates. And here's my final reminder. You are not alone. The US tax and immigration systems can be overwhelming, especially when you're new to them or dealing with international income and retirement. Stay organized, get the right support, and don't wait until a small issue becomes a big one. My name is James, and this is US Updates Hub. Thanks for watching, and I'll see you in the next video.